last class we were saying about not-for-profit organizations and what is a Section 8 company, characteristics of a Section 8 company. Similarly, we've seen about trust, and we've already also seen about societies. So how does a trust work and all these things? I was telling you with the help of an example. So in today's class, we'll just continue from there. I'll be explaining how do you register a trust. Am I audible first? Am I audible? Okay, great. Great. Thank you. Thank you. Once again, I'll just keep my phone on silent. I'll keep it away. One second. Yeah. Great. So let me share my screen. So we stopped it here. So I said earlier, when we talk about Section 8 company registrations, we've already seen it in the other classes when we were discussing about private limited company registrations. The same process, whatever we follow for a private limited company, 2 members, there's no capital restriction, there's no stamp duty, and the objectives have to be for charitable purpose, not for profit organization. You should make sure that no dividend clauses are there. And you will have to get one license extra apart from the normal incorporation process that a company, private limited company does. So the extra step that we normally do for a Section 8 companies, we get a license, Section 8 license, which is given by the central government. And anytime if the central government feels that the particular company is not following the norms that are prescribed for a Section 8 company, which is not doing its activity for a not-for-profit or is misusing the license that is given, the central government has the powers to cancel or revoke the license that is issued. So this is what we've normally seen about a Section 8 company. Going to the next one is formation of a trust. Okay, so who can be a trustee? A trustee can be any person who is capable of holding a property. And who can be a settler? Normally, settler is the person who actually forms this trust. Okay. Last class, I've told you with an example. There's an old person where he has a lot of property and he wants to do something good for his people. So he forms a trust or give it to his grandchild. And I told you when it will be called as a private trust and a public trust. Okay. So students who have not seen the last class can see it once. It is there in the YouTube. They've uploaded it in the YouTube. So can be created only by person who's eligible to complete the age of 18 and mentally sound. So who can be a settler? A settler should be a person who's above the age of 18 and who's having mentally sound, who's mentally strong. Okay. And the main document here, whenever we call a trust, the main document here is the trust deed. Okay. The trust deed will have all the particulars, provisions relating to the trust, and that will be taken to the sub-registered office, and all the trustees also should be present at the time of registering the trust, and it has to be taken on a stamp paper. So this particular stamp paper, again, it will differ from state to state based on how the value of the stamp paper on which it has to be executed. Okay, in few states it will be 300 rupees, in few states it will be like 800 rupees. So because state stamp duty is subject to state act, so for each state it will differ. Okay. Few important content what has to be there in the trust deed, because trust deed is the important document here. What will be there in the trust deed? So tomorrow if you get a question saying that draft a trust deed, you should know what will be the particulars of the trust deed. So the trust deed will have the author or the settler, which is who is forming the trust. Second is the trustee, who is going to manage the trust. The beneficiary, who is the end beneficiary, whether to identify whether it's a private trust or a public trust. Normally these tax exemptions will be given only if it's a public trust. And then name of the trust, principal place, property. What is the trust property? Because trust, the meaning, even in study material you will be reading in few places, will be held as trust. So what is the purpose of this trust? The purpose of the trust is to hold some property. for the benefit of another beneficiary. Okay. So what is the trust doing? It is holding some property. So there should be a trust property. So the details about the property and the intention to divest the trust property, the objectives, the procedure for appointment and removal of the trustees, the rights and duties of the beneficiaries. So all these things will be the particulars of the trust deed. Okay, it has to be printed on a stamp paper and obtained signature of the settler, trustee, and the witness of the appropriate place along with the passport size photo on their KYC. Normally, when they say KYC, don't get confused. It just means their PAN card and their voter ID or Aadhaar card, some ID proof. Okay, KYC documents. When they say KYC documents, it means that your ID proof. Okay, now that will be a PAN card and it can be Aadhaar card or passport, whatever ID proofs. So that is what is KYC relating to. Okay, so this is how you normally register a trust. Going to the next one here is formation of a society. Again, societies are also not-for-profit organization, and here there is no concept called as a trustee or a beneficiary or a trust property. It is just formed for the benefit of a set of people who are going to be their members. Okay, societies are particularly, and in certain places there will be trusts which are formed for the benefit of the people who are in that particular locality or something. So to benefit someone who is in that particular region, societies are normally formed. Okay, so when you want to form a society, societies are mainly and also to talk about societies will mainly be for purposes relating to, again, promotion of art, science, literature. However, we were seeing in a Section 8 company, the same kind of objectives will be like when you're going to have some museums. So if you go to a few museums, that will be in the form of society. At times zoos, okay, old archaeological collections. So all these things will be kept in the form. Society is something which would maintain all these things. Okay, so if you want to register a society, minimum 7 members are required. Okay, and registration can be done either at a state level or at the district level. When you talk about societies, there are separate enactment which is passed at the state level, and there's a Societies Registration Act at the central level also. Okay, so it can be either done at a state level or at a central level, and here they're saying or even at a district level. Based on the level that it is being registered at, your functioning will be within that particular limit. If you're registering under a district level, then your functioning will be only restricted to that particular district. You cannot expand your operations beyond that district. You have a jurisdiction restriction based on the registrations that you do. And similarly, like your MOA and AOA for a company, for societies, it is normally called as Memorandum of Association and Bylaws. Instead of articles, we call here as the bylaws. And instead of board of directors, here we call some of them called as the managing committee. Okay, so here normally how do societies run? You take even for example ICSI, NIRC, SIRC, all these regions, basically they get themselves registered as a now a lot of them have converted into a Section 8 company. Earlier, how it used to be in the form of a trust, in the form of a society. So that is why you will have a chairman, you will have a secretary, you will have a treasury. Okay, so normally these, and you have the committee members. Okay, you take a particular institute itself, for example, you will be able to see the committee members. You will have the chairman, you will have a treasurer, you will have a secretary. Same names, same concepts will be there even for all type of societies. So the committee members, how they will be appointed, how they will be removed, everything will be as per the bylaws. And all the members, see, we are ICSI members, so we all vote and we elect our representatives. So this is how it normally happens even in societies. Okay, so authority letter duly signed by all the members of the managing committee, then an affidavit sworn by the president or secretary of the society together with the code feet, a declaration by the members of the management committee that the funds of the society will be used for the furtherance of the objectives. Affidavits saying that we will do only these type of objectives. We formed for the benefit of our members. Okay, so all these stamp duty, affidavits, everything has to be kept. Along with the documents needed are a letter requesting the registration signed by the founding members. Okay, those 7 members have to sign and they have to give a letter. Then signature of all the members is mandatory. So all the members in all the pages, normally they ask them to sign it. It is normally a physical process. It is not an online filing. Then certified copy of MOA and AOA, certified copy of the rules and regulation, here they refer to AOA. In duplicate has to be given. Table of names and occupation of the members of the society. Those 7 member details will be there. The minutes of the board meeting. And when we talk about minutes of the board meeting, when societies are normally formed, how it will be normally formed is, first these 7 members will come together and they will conduct a general body meeting. 7 members are like the shareholders. There's no share concept in society, for your understanding, I'm telling you, are like the shareholders of the company. So these 7 people, before the society gets registered itself, they'll come to the society and they will pass a resolution saying that let's get the society registered. So the minutes of that particular resolution copy has to be submitted, and the affidavits which we saw earlier, and the registered office address where we are going to have, and if it is belonging to some other person, then a no objection certificate has to be given saying that let's start this society. So this is how normally society registrations are done. Registrar of societies will normally do this. So these registrar of societies, you can find them in the sub-registered office itself. So they will have a separate room for them, where if you go inside the sub-registered office and you can ask where is the registrar of societies, they will tell you which room they belong to. You can go and get your society registered there. So this is how it normally functions. Okay, and yeah, yesterday we saw all these also, correct. NBFC, types of NBFC, 10 types of NBFCs also we've seen in the last class. Okay. This is final. It was like a recap what we did so far. Benefits of incorporation. So we saw what are the 10 different types of NBFC companies. So NBFC companies, even though we know it is a non-banking financial company, it doesn't mean, see, they gave a definition for a NBFC company. What it can give loans, it can accept deposits, it can do leasing, it can do hire purchase, it can do chit business or investing activity, but it should not do any trading activity, service related activity, real estate activity, agricultural activity. These things they are not supposed to do, which means that the normal business, trading, service, that and all we should, this NBFC company is not supposed to do. All finance related and investment related they can do. And when we take about investment related or finance related, that can be broadly classified into 10 types, where they've subclassified these NBFCs into 10 broad types, and we saw each type of NBFC in the last class. And what are the benefits of going for these NBFC companies? That whenever I go to a bank for a loan, what normally happens when I go to the bank is they check my credit worthiness. They see my CIBIL report, and when my loan, some of you would have applied for credit card, but your credit card would have got rejected, or you would have applied for a loan, your loan would have got rejected, or you would have seen your friends who are doing this. Why does this get rejected? Because you don't have a good credit worthiness within you. So when I go to a bank for a loan, they check all my how much of tax I've paid last year, how much of turnover I've made in my business. Based on all these things only I get my loan. So it's exactly a long process, because they have to check all this and give. So it is a long process, and the possibilities of getting funding is less. But when I go to an NBFC company, the process is very quick, and I get good loan also with a competitive interest rate. For this purpose, normally people would prefer going to NBFC companies. So this is what is explained in the benefits of incorporating NBFC company. The continued better performance of NBFCs has risen to uptick of 15% customer satisfaction. Compared to a bankers, NBFC customers have 15% more customer satisfaction. Competitive interest rate, quick processing, less rules and regulations, a loan available for individual with poor credit rating. All these things have made it more attractive for people to approach NBFC companies. Okay, now how do we incorporate a NBFC company? So we've already seen that certain NBFC companies should mandatorily get themselves registered under Section 45 IA of RBI Act 1934. So this is what we saw in the last class. And they were given few certain exemptions to this, like chit business, nidhi company, merchant bankers, and people and insurance companies, and few other venture capital companies, which because for all these things, SEBI or IRDA or the concerned state government or Ministry of Corporate Affairs, they are the regulator. RBI has given exemption from all these type of people from getting themselves registered under section 45 IA of RBI 1934 Act. Okay, all other type of NBFCs, if they want to do NBFC related activity, they have to get themselves registered under RBI. Only then they will, and they have to apply for a separate license. Only after they get that license, they will be able to do NBFC activity. But before I approach RBI for a license, I should be in a form of an entity. After I get completed as an entity, I have to go to RBI and get a license. So what type of entity can approach RBI for an NBFC license? Only entities that are registered under Companies Act. You should either be a private limited company or as a public limited company, and then go to RBI and get RBI NBFC license. And when I am a private limited company, I don't have the powers to accept deposits. But if I get registered as a public limited company and then go for NBFC license, then there are possibilities for me to get deposit accepting license. But if you see from 2007 onwards itself, the number of NBFC companies that are granted license to accept deposits has become very low in order to protect the interest of the deposit holders. So only big corporations, big like Reliance corporations or the Aditya Birla Corporation. So these type of companies, when they are forming NBFC companies, only they have good credit worthiness and they have good reputation. Only they are getting license for deposit accepting. Small companies, if they apply, they are not getting license in the in the past. They were not getting. So what is the procedure for incorporating a non-banking financial company? Is the same as any other company. First, you have to apply for a name, and you have to enrich your articles based on the NBFC related activity. Have your objectives, what type of objectives, what you're going to do, whether you're going to do investing in shares or hire purchase or insurance business or chit business or whatever type of business. Make sure you incorporate those objectives in your AOA, and then in your MOA object clause. After that, I have to satisfy two particular conditions. The first one is the net worth should not be less than 2 crores. Okay, and then I'm my authorized capital and my paid up capital is not less than 2 crores, and I'm a company registered under the company. These two criteria I have to satisfy. And if my net worth is more than 2 crores, then I'm eligible to make an application to RBI. So what is the process that is involved in while making the application? So the registration process with RBI. After the incorporation of a company, the NBFC must obtain certificate of registration. Before applying registration, the company should ensure the following things. Just 1 second. 1 second. There's someone. I'm sorry. 1 second. I'm 1 second. Am I audible now? Am I audible now? Okay. I'm sorry. Postman came. I'm sorry. Yeah. Let me close this. There was a post. Okay. So So the registration process that we were saying, before I approach RBI, I have to ensure that certain points. Okay, so those are like you should have a minimum one director from NBFC background or a senior banker as a full-time director in the company. So that out of the total number of directors, at least one director should have some NBFC related background, or he should have been working in a senior position in some bank. Okay, then he should have a clean CIBIL record, CIBIL records. Okay, so when we take the CIBIL ratings, the company and the directors both should have clean CIBIL ratings. Okay, and all the directors of the company should have good understanding about NBFC and finance related business. So only if the directors are having this particular knowledge, then RBI will think of giving the license to you. Okay, and procedure for filing the application with Reserve Bank of India. The applicant company is required to apply online, so it's an online process, and submit a physical copy of the application along with the necessary documents at the regional office of the RBI. So, for example, if for each region there will be a particular RBI regional office that is located. It can be either like Chennai, Mumbai, Bengaluru. So in every region you will have one RBI regional office. So you will have to get you will have to submit online and one copy offline to the regional office. Okay, the application can be submitted online by accessing the RBI secured website. So this is where you normally can apply for the registration. For example, 1 second. See here they are saying for company registration, click here. NBFC related company. So this is the website where normally, and then you'll have to go inside and you have to make this application. So select the type of company and the registration certificate. So it's an you can see it is basically an online process. Okay. So you will have to go to that particular website, and you have to go to the website where I showed you just now and make that application. The applicant company will not need to log into Cosmo. So here we saw earlier itself. Should you log in? No, you need not log in. For company registration, without login you can do. This is what they're saying it. Without login, so hence user ID is not required. The company can click on company registration and log into page, and you'll have to submit your documents, your initial set of documents. The company may note to indicate the correct name of the regional office, because if whichever where your registered office address is situated, in that particular area only you should submit this application. If you don't submit it, then your application will get rejected. So you have to make sure whether the place where you're registering is the correct. Thereafter, the company has to submit a hard copy. The company has to check. After submitting this, they will get an acknowledgement copy, and there will be initial level of screening done by the RBI. And if RBI is satisfied, then the second level of documentation you have to give, that will be normally huge in size. Okay, saying that give that particulars, give this particulars. They will then check your more, because there will be two levels. Like even for insurance we saw, there are two levels. So this particular level is the basic level of registration. If you clear this basic level of registration, then you will go to the second level of registration. Okay, so this is how you normally incorporate a NBFC company. Going to housing finance companies. So what do you mean by housing finance companies? Housing finance companies are normally regulated by the National Housing Bank. Okay, and the act under which it is getting regulated is National Housing Bank Act 1987. So these are also a form of an NBFC company. And right now, if you see, even a prime minister was saying by in the next 2-3 years, we want to make everyone have a house, every person to have a house for themselves and all these things. So there's a lot of advantages that are happening for buying houses, purchasing houses. If you see the housing loan, now it's become 6%. So gradually they're promoting, and a lot of budget is allocated for these type of people. If you see the budget in 17-18 itself, 3,96 crores is particularly allocated for this housing finance companies. Okay, so they can commence or carry on the business without, they're saying no housing finance company can do any business apart from getting a certificate of registration from the National Housing Bank. So here, like how we apply for RBI, here we have to apply it for National Housing Bank, and the minimum net owned funds should be 10 crores. Like we saw for NBFC companies, this is also a type of an NBFC, but for housing finance, there is a separate slab rate that they've given, which is 10 crores, not 2 crores. Okay, so this is about housing finance companies. These two we saw 10 crores, and it should have the objectives related to it. These are actually, you have to read it. It is all theoretical. Asset reconstruction companies, we've seen something about what is called a securitization and all these things. So just like, I'll just explain you what is the concept of securitization, and then you can just read this once. So when I talk about securitization, what happens normally is there will be a person. Banks, what is the main function of banks is it will accept deposits, for example, and it will give the deposit holder a return of 5%, for example. And the deposits, whatever it is there in the bank will not have it within the bank. They will put it on rotation by giving it as a loan to someone else. The person who takes as loan, from him, the banker will collect 12% or 13% interest. So the extra 7%, 8% is their profit. So they do this rotation work and they earn their profits. So they need money for rotation. Okay, and then they'll take the money again, then they will give loan to someone else. So money keeps rotating this way. When huge quantity of loans are given to a particular individual, and that particular individual is not repaying you the loan on time, the money gets blocked. Okay, now the bank needs to function. Okay, but he is not giving the money, so that becomes a non-performing asset. So in these kind of places, just like factoring, what we saw, these asset reconstruction companies will be are formed to bail out these banks. So what is asset reconstruction? Because it is a non-performing asset. That asset has to be reconstructed. So these asset reconstruction companies will come to the bank and say, we will buy your asset, which is your receivable, and we will take the payment from him, or we will do whatever we want with the payment, and we will pay you some money. Where he has given a loan of say 100 crores to some person, the asset reconstruction company will give the bank only 80 crores and say that 20 crores is the profit for the risk that we are taking. Okay, even the bank will be okay with it, because they are getting at least 80 crores and they can continue their business. So what will this asset reconstruction companies do? They will purchase that that particular receivable, and whatever things that that particular borrower would have mortgaged, they will break it into small security bets, and they'll start to sell it off. Okay, so this is called as normally securitization, in order to revive and to get the money back from him. And they will use all sort of possible ways to get the money from him. So for this purpose, certain type of companies are being formed, which is called as the asset reconstruction companies. So asset reconstruction company being set up to provide focused approach on non-performing loans. Resolution issued by isolating the non-performing loan from the financial system, which means that we are taking away the non-performing asset from the bank, then freeing the financial system to focus on their core area. We are saying the bank, you focus on your core area, we will take care of the receivable. Facilitating development of market for disaster asset. So So we are making the financial market more good. So the main focus of asset reconstruction companies are these things. This got its importance under SARFAESI Act. Okay, so this is about asset reconstruction companies. Again, you can just read it out. Going to the next one is microfinance institution, which is called as MFIs, NBFC MFIs. These MFIs are normally, you can see these type of MFIs in rural areas where for a HDFC bank or an ICICI bank, or it can be even nationalized banks like SBI bank, they can't go to each and every village and they can't open their branches because there's a running cost for it. So in order to facilitate banking activity in a rural area, what is happening is they are the local people over there itself, they're promoting microfinance institutions where these are given to a small level of loans are given to those local villagers over there. So okay, so NABARD, National Agricultural Bank and rural development. So NABARD has defined microfinance as provision of thrift, credit and other financial services and products of every small amounts to the poor in rural, semi-urban and urban areas. So they've given a definition. What is a microfinance institution? What will be the characteristics of these MFIs are basically the size of the loan given by the MFI is very small. If you see, it will be like only 1 lakh. The first cycle will be only 50,000 rupees. If they are in the semi-urban areas, the maximum loan that a particular person can get is only 1.5 lakhs. So the amount of loan that is normally given is very small. The repayment period is very short. MFI can mobilize resources from both internal and external sources, which means that I'm having a MFI company. I will have my own deposits, which I will give as rotation. But how much of donation that deposits will I get from these small villages? So what I can do is I can go to big banks. For example, I can approach SBI and I can say I am an MFI which is performing in this particular village area. If you can give me loan, I will give it in rotation and I will repay your loan. Okay, so which means that I am mobilizing from external. So I can get from other financial institutions also. I can use my deposits also for giving the loan. So that is what is being said here. No collateral for loan is required. Here, very important thing what they're saying is, for the benefit of the village people, you should not torture the village people, because we would have seen you're not repaying the loan, you vacate the house, you give me your house, you write and give me your land. So all these things we would be saying, at least in movies you will be saying. So in order to avoid all these kind of things, they have said when you're going to do MFI activity, MFI NBFC, no collateral to be taken. That is why cooperative banks normally predominantly play. Cooperative banks are different from MFI NBFCs. Now there's a case which is running in the Supreme Court where they're planning to bring even these cooperatives under RBI. If that comes, it will be more regulated, and these abuse of cooperative people who are doing to the village people will reduce to a drastic level, and it would become more systematic. But there is a case saying that no, you should not do it. Both of them have their own stand. But until then, MFIs, so when compared to cooperatives, the number of MFIs that are there are very less, because cooperatives are there from very long period, the traditional way of giving loan in rural areas. The purpose of end use of the loan is flexible. So whenever you give a loan, even when we go to a bank, we say what is the end use. However, here it is flexible. I can use it for my business. I can use it for my personal purpose. There's no big restriction on the end use. Loans given are mostly group loans. Okay, because tracking down to individuals become difficult. If you go to villages, you can find few groups, like women welfare groups or farmer interest groups, where each group will have not more than 20 members in each group. So these groups, they will give this MFI will give loan to that group, and the group will in return will give loans to the group members. So it will be easy for the MFI also to collect it from the group rather than going to individual person and asking for loan. it is normally given as group loans. The transaction cost is very low. Okay. Again, this you'll have to make an application to the RBI. Okay, Nidhi companies that we've already discussed what a Nidhi company is, so I'm not explaining what a Nidhi company is again. Going to the next one is the payment bank. So you would have seen recently Airtel Payment Bank. Most of you would have seen Airtel Payment. So these are basically payment banks. Payment banks are a new model of banks conceptualized by the RBI. These banks can accept a restricted deposit, which is currently limited to rupees 1 lakh per customer. Okay, as of now it is, they can accept deposits but restricted to rupees 1 lakh per customer. Both current account and savings account can be operated by such banks. So that is nice, because in Nidhi companies, current account can't be opened. But in payment banks, both current account and savings account can be opened. Payment banks can issue services like ATM cards, debit cards, internet banking, which means that normal NBFC companies cannot do this payment and settlement system. When I spoke about payment and settlement system, I was telling about online banking and credit card, debit card, checks and all these things. But when you see this particular payment bank, they can issue ATM cards, debit cards, internet banking, third-party transfer, mobile banking, all these things they can do. However, there is again some restriction that's given, cannot grant loan or issue credit cards, which means that they can facilitate money, they can accept deposits, but they cannot give loan. Okay, so payment banks are not allowed to give loans. Okay, and the minimum capital required is 100 crores for first 5 years. The promoter stake should remain at least 40%. At least 40% promoter stake should always be there. Foreign holding will be allowed in this, so FDI is allowed. And again, they've given few concepts which I think you can read it. Okay, with this financial service chapter is over. Any doubts that you would like to ask me now? Avadish Kumar Dikshit is saying that housing finance companies are now regulated by RBI. Okay, that's information for me. Thanks for sharing. Yeah, Pradhan Mantri Ujjwala Yojana about the houses. Fungibility, Harshita, even I don't know. I have to refer and only and say. I'm sorry. Why RBI regulates NBFC? Because the entire financial system, there should be a particular regulator for them. Why companies are regulated by MC? Because the same type of questions. There should be a head for all type of banks that are there. No, there's no separate body for it. There's been a lot of questions on asset reconstruction companies. Can you explain again? Self-help groups are, what is the difference between self-help groups and society? Ashwin has asked. Self-help groups are normally not a registered entity, but societies are registered entity. Since most of you have asked to explain asset reconstruction company again, let me tell you in short. See, what normally happens here is, see, what are Section 8 companies? Section 8 companies are MFI companies. So if I want to register NBFC MFI, then I have to be a Section 8 company. Okay. Yeah. Talking about asset reconstruction companies, there will be banks. Banks will give particularly, they will give loan, and that loan they will show in their assets as receivables. So when that loan is not being paid back by the borrower, that particular receivable, which is in the asset side, becomes a non-performing asset. Okay, so there will be few companies which are registered as NBFC companies. In order to bail out these banks, because these banks have to do their continuous operation, they do operation by rotation of funds. So in order to bail out these banks, what these asset reconstruction company will come and say is, in your assets, we are seeing a non-performing asset. We will buy it from you. We will bail it out from you. You concentrate on your core area. We will collect it from him. We will collect it from him. So this particular work is done by the asset reconstruction companies. Okay. This is what basically in short what the asset, and how they bail, how they collect it from them is again a different concept by itself. Okay. Okay. Ashwadhar is saying fungibility is dematerialization and rematerialization of shares. Okay. So Harshita, your answer is given by Ashwadish Kumar. Danali, asset reconstruction companies can file on their own name to recover the funds if they want to go to NCLT, because the bank has sold that receivable to them. That receivable after that it will belong to him. Okay, so he can file in his own name after that. Okay, fine. We'll just take a quick break for 2 minutes, or let's do one thing. We will discuss about status of registered companies, and then we will take a break. Okay. Kavita, you're asking to explain the payment bank concept once again. So when we talk about payment banks, these are basically small banks which are having a net owned funds of rupees 100 crores. They can accept deposits. They can open a savings account. They can open a current account. They can give a debit card. They can help in making payments online. For example, when I do a shopping online, I can help in making payments. I can uh, give internet banking facility, but only condition what I cannot do here is I cannot give loans or issue credit cards. So normally what does banks do? Banks do accepting of deposits and giving loan. Okay, but payment banks will give only will facilitate only the payment systems, but it will not give any loans to anyone. So this is what payment banks are basically, Kavita. See, these notes I've already given it in the last class itself. Same thing I'm just seeing, and I'm explaining it to you. All my notes I've already given it to you. They collect their service charges. How do they normally earn is because they collect their service charges based on these things, and they will in turn deposit their funds in some various other investment schemes. Okay, so let's again 1 second. Okay. So first three chapters we've already seen, and this chapter actually it's a repetition of the concepts which we've been already seeing, but then I thought here and there wherever if few things have to be highlighted and explained, I thought I can explain it. So I've just taken this is our study material, legal status of registered companies. So this is the fourth chapter. So types of companies, we've seen all these three types of companies: private limited, public limited, definitions we've seen. So let's directly go to one-person company. A one-person company is also a private limited company. Okay, it's also, that is why in the name itself it will be written OPC private limited, but it have the privileges of a proprietorship. Here the concept is, in order to make our business more systematic, sole proprietors are getting converted into one-person companies. However, there's a restriction on the volume of trade that you can do, beyond which if you do, you have to mandatorily get converted into a private limited company. So where your paid up capital should not exceed 50 lakhs or your turnover should not exceed 2 crores. Okay, one-person company which has only one person as a member. Certain characteristics. Let's see only these few important characteristics of a one-person company. The financial statement with respect to one-person company may not include a cash flow statement. We've already seen when we are talking about exemptions that are given for a private limited company, for small companies, for dormant companies, for one-person companies, cash flow statement is not mandatory. The same point is what has been discussed here. The memorandum of one-person company shall indicate the name of other person with the prior consent, saying that who will act as nominee in case of his death. So the memorandum of association, because other private limited company or a public limited company will not have this particular clause about nominee. So that is why they are highlighting and saying, in the event of death of the one person, who will act as the nominee, the nominee detail also along after getting the nominee's consent will be written here. And what is it? The one person also should be a citizen and a resident. The nominee also should be a citizen and a resident. The word one person shall be mentioned in brackets. So sometime back I've said it should be within the bracket OPC private limited. Okay. In relation to one person, the annual return shall be signed by the company secretary, or where there's no company secretary, by the director of the company, which means that annual returns normally who should sign? Two persons should sign. Okay. However, here when we talk about one-person companies, it can be signed either by any one director. Okay. For the purpose of section 114, any business which is required to be transacted at the annual general meeting or at other general meeting by means of an ordinary or a special resolution, it will be sufficient. In case of one-person company, the resolution is communicated to the member and the entry is made in the minutes book. So there is no concept of AGM, there's no concept of EGM, there's no concept of ordinary or special business. You have to just communicate it to him, and if he says okay, you enter in the minutes book, and the day it is entered in the minutes book, signed and dated by the member, and such date shall deem to be as the date of the meeting. So the day it is entered in the minutes book and it is signed by that member will be the deemed date of the AGM or the EGM. Okay. So there is no concept of AGM and EGM when it comes to one-person company. The day it is entered in the minutes book and it is signed by the one person, it is deemed, that date is deemed to be as the date of the AGM. Okay. Notwithstanding anything in this act where there is only one director, the board of directors of the company, any business which is required to be transacted at a meeting of the board shall be sufficient. The same concept where if is applicable even for directors, provided there is only one director in the company. Okay, for one-person company, what they're saying here is minimum one director should be there. And suppose, for example, if there is only one director in this one-person company, in that case, even board of directors meeting need not be conducted. The same concept, the day it is entered in the director in the board meeting minutes book will be the deemed date of the transaction that has taken place. However, if there are more than two directors, then I have to call for a board meeting and transact everything in a duly convened board meeting only. This exemption is only when I have only one director in the company. Okay. The financial statements, including consolidated financial statement, if any, shall be approved by the board before they are signed on behalf of the board only by one director or for submission of the auditor. Okay, financial statements also, if there is only one director, then only one director will sign on behalf of the board. Okay, and the 1% company shall file the financial statement duly adopted by its members along with the documents which are required to be attached in such within 180 days from the closure of the financial year, which means that the due date to file the financial statements with the registrar is 180 days. When I talk 180 days, which means that 6 months, which is 6 months from the end of the financial year, which is September 30th. So by September 30th, I have to file my return for 1% companies with the ROC. Okay. So due date to file the return is 180 days from the, so you should not write, basically you should not write September 30th, you have to write it as 180 days from the end of, from the closure of the financial year. Okay. And 1% company, small company, dormant company are deemed to have been complied with the provisions of this act if at least one meeting of the board of directors has been conducted in each half year. Okay, so and not less than 90 days gap is between two board meetings. So normally for any company you have to conduct 4 board meetings in a year. What they are saying for 1% company, dormant company and small company, if you conduct 2 board meetings in a year, once in each half year with a gap not exceeding 90 days, no, not less than 90 days between 2 board meetings, in that case you're said to be in compliance with the board meeting provisions. This is something about a 1% company characteristics. Okay, again here I'm not going to explain too much. Everyone know what a corporate personality is: separate legal entity, limited liability, perpetual succession, separate property, transferability of share, it goes to the nominee, capacity to sue and to be sued. All these things we already know, so I'm not explaining too much on this. Let's go to the next type of company, which is a small company. So certain characteristics, so which will make us to remember, okay, this is what is a small company is. A small company is a private limited company. After explaining what a small company is, we will take a small break for 2 minutes and then we'll continue again. Okay. So small company are also a private limited company. Again, the same capital and turnover criteria, which is applicable for a 1% company, is applicable even for a small company, which is 50 lakhs of paid up capital and 2 crores of turnover. And there are certain exemptions and privileges which are given to these small companies. So first, what they're saying is what section 85, subsection 85 of section 2 defines what a small company is. They are defining based on the turnover and the paid up criteria, and provided nothing in this clause shall apply to a holding company or a subsidiary company, a company registered as section 8 company, a company or a body corporate governed under special act. So even though it is a even though the turnover or the paid up capital is less than the prescribed limit which is said above, which is 50 lakhs or 2 crores, if I'm a holding company or a subsidiary company, I will still not be considered as a small company. That is same applicable even in case of a section 8 company or any other company which is governed by any other special act. Okay, so for a holding subsidiary company, small company concept will not be applicable. Section 8 company or any other act governed by any other company which is governed by any other act, even they will not be governed. So what are the advantages of, so why small companies? What? Because they have to give some amount of liberty, saying that whatever say the Ambanis are filing, if a small businessman also wants to file everything, it becomes very difficult for him, because the amount of manpower, the amount of money that he's got, amount of time that he can invest in all these compliances is very minimal. So in order to protect the interest of small business persons, they given few exemptions for small companies. So let's see what are the advantages. So why should I get registered as a small company? Why should I remain as a small company? Okay, so filing of annual return. So annual return of a private limited company classified as small company can be signed by the company secretary or by a director of that private limited company. Okay, which means that one director signing is sufficient. The annual return of the private limited company not classified as the not classified as a small company must be signed by director and company secretary. If there is a company secretary, it has to be signed even by a company secretary. And if there is no company secretary, it has to be signed by a company secretary who is in practice. Okay. But for a small company, the director itself can file the return. They can itself upload it. There is no certification which is required to be done for annual return. Coming to the board meeting, the same concept we saw for 1% company. Two board meetings, once in each half year, and the gap between two board meetings should not be less than 90 days. Same is applicable even for a small company. Cash flow statement, again, what we saw for a 1% company, not applicable to a small company. Rotation of directors, auditors. We would have seen certain class of companies, okay, which are supposed to not appoint auditors for a period more than 5 years, 5 consecutive years. After appointing an auditor for a period of consecutive 5 years, there should be a cooling period of another 5 years. After that only you can appoint them. In case of an audit firm, you cannot appoint an audit firm for a consecutive period of 10 years. There should be a cooling period of 2 years, and then only you can appoint the audit firm again. All these provisions are not applicable to a small company. So this is what has been explained here. Private limited companies classified as small companies are not required to rotate their statutory auditors. So they can have for lifetime one auditor, no problem. They need not rotate it for small companies. Private limited companies not classified as small companies must rotate their auditor for every 5 or 10 years. Okay. If these companies fall within the prescribed category, such as, so what, for which class of companies this rotation becomes mandatory? Paid up capital is more than 50 crores or more, or these are having public borrowings from financial institutions or banks or deposits of rupees 50 crores or more. Okay, paid up capital of 50 crores or more, or public borrowings of 50 crores or more. In all these cases, this rotation becomes mandatory for them. Also, companies registered under section 8 is also specifically excluded from the definition of small company. Hence, companies registered under section 8 would not be a small company even though it is a private limited company. So they've clearly said, which means that this provision is not applicable to a section 8 company. Section 8 company, again, they have to ensure this rotation and all these things. Okay. So the rotation of auditors is not applicable for a small company. And we've already seen holding company and a statutory company, subsidiary company. We will see after a break. This is all about small companies. Okay. So any doubts that you would like to ask with related to so far? We will just answer quickly 1-2 doubts and then we can go for a break. Kavita, you've been asking why is the CS supposed to sign the financial statement? See, company secretary is the governance professional. He's the compliance officer. So it is his duty to act as a whistleblower in case if something goes wrong. If he is signing only, he will have that fear in him. And he will also advise the management in a way saying that, sir, please don't do this way. It will be a problem not only to you, even for everyone. Okay, so they're making even him to sign because of that. Yeah, I have the new material also with me. What I've done is in few areas I've highlighted few things and I've kept. That is why I'm seeing the old thing, because conceptually the concepts will remain the same. What a 1% company, what a small company is. That is why I'm using this study material. If you want after the break, I'll use the downloaded one, but I don't have highlight because in few places I've mentioned few comments and highlights. So it would be easy for me to explain it to you, those places. See, one-person company, small company is a private limited company, but having uh, the threshold limits within the 2 crores and 50 lakhs. One-person company, the concept itself, 1%, they get registered as a one-person company. Small company have 2 members and one-person company have 1 member. All differences, whatever is between a private limited company and a one-person company, you can write as the difference between one-person company and small company will remain the same. Okay. See, I was telling about holding company and subsidiary companies. If I am a small company, but however, if I am a holding company for some company, or if I'm a subsidiary company of another company, even though that 50 lakhs or 2 crores I am within the prescribed limit, I will still not be considered as a small company. Okay. If the one-person company has got 2 directors, what is the quorum? The quorum will be 2 only. The minimum number of members that are required for a small company is 2. Harshita, you're asking if any board agenda is necessary to discuss in between 90 days gap in small company or one-person company, then what about board meeting? I'm not able to understand the question properly. Uh, what about board meeting? See, they're not going to discuss about the agenda. When I'm going to say once in each half year, board meeting has to be conducted once in each half year. Uh, and they're saying you can conduct meeting even within, for example, every month you can conduct a board meeting. There's no problem in it. But you cannot have uh, within half year means uh, for up to June, there's the half year gets over. After July, there's a half year which gets over. June and July, if I'm having 2 board meetings and saying for the entire year, 2 half years I conducted board meeting, that should not be allowed. Okay, for that purpose, this 90 days is set. Uh, Understand it in that way, because they're saying each in half year one board meeting has to be conducted. In June, if I'm going to have one board meeting, in July, if I'm going to have one board meeting and say I've complied, that is going to be wrong. For that purpose, they are saying minimum 90 days gap should be there between those 2 meetings. If you're going to have every month, no problem. Maximum is 200 members. Maximum is 200 members. Okay, so we will just take a quick break. For small company, the maximum number of members is 200, just like a private limited company. So what we'll do now is we'll take a small break for 2 minutes and then we'll again resume. Okay, I'm offing my video and audio. After 2 minutes, we'll resume. Okay. Okay, we'll start now. Is there any doubts that were asked after that? Is there any special, is there anything special to be affixed in the name of a Section 8 company to identify Section 8 companies? So Section 8 companies would normally be having the suffixes like foundation, council, confederation, like this. So it will not end with private limited or limited. By just looking at the name itself, we'll be able to find out that it's a Section 8 company. Okay, so all entities whose name end with Payments Bank Limited, like Post Office Payment Bank, Paytm Payments Bank, etc., are payment banks. Yeah, their name should exclusively have the term as payment banks. Correct, Tony. Correct. So we'll just continue with where we stopped, or what we'll do is. I have the study material with me here, the latest one. This is applicable for your 2020 exam. Let's quickly cover a few portions which require some focus on it. Charter documents. We've seen about MOA, AOA, enriching it, doctrine of ultra-vires, doctrine of indoor. So anyone knows what do you mean by doctrine of indoor management? Doctrine of ultra-vires, we know, everyone know. What do you mean by doctrine of ultra-vires? Anyone knows? Doctrine of indoor management. We've seen all these things. Yeah. The new material which I took, even this is having, no? So we'll see what a holding company. So anyone who knows what is the doctrine of indoor management? Yashwanti, yeah, what is your doubt from last class? Daughter, so Sriram has typed something. Sriram Swarnan. Doctrine of indoor management is to protect the outsiders from the operations of the company. It is to protect the outsiders from the operation of the company. Doctrine of indoor management is to protect the outsiders from the, okay, the same thing you typed again. Outsiders from the operation. Correct. But yeah, correct. What you're saying is Sriram Swarnan, it is to protect the outsiders. Ashwin said if any party is entering into a contract with the company, he must be well aware about the company's prospectus. Is what Ashwin is saying. Pooja. Outsider have not need to check about internal management. Good. Pooja. Good. We have a bank, NBFC, financial institution, and other companies, but why do we need a chit fund? Ishwanti, I will come back to you. Let's see what others are saying. Indoor management companies liable for mutual fund. Also, we have to protect the internal matters. Okay. So exactly here, what it is basically is there are few documents that are publicly available, like my balance sheet, profit and loss account, my annual reports, everything I'm filing with various regulators. So which is basically publicly available, my MOA, my AOA, all these are public documents. So if I am not doing due diligence by reading those documents and if I enter into a contract, I will be liable. Okay. But there are certain things like I've got the members' approval, I've got the directors' approval. They will say that they have decided with the board of directors have decided to give to enter inside this contract. For example, there are 7 board of directors and they're saying we passed the board resolution. We are entering into this contract. So I don't know whether they've actually passed a board meeting or not. Based on what they say, I'm entering into a contract and all these things. Later, if some of the directors come and say, no, the board meeting was not conducted, or approval was not taken, the contract will become invalid, then I will have to given some protection, some compensation, because based on your words, I've got into it. It is not your minutes book is not a public document for me. So doctrine of indoor management will give protection to the outsiders, because I really don't know what has happened in your company. But if the same thing, if it was a public document and due to lack of negligence, I have not done my due diligence, then I will be liable. So this is what is a doctrine of indoor management is. So yeah, we were seeing about types of companies, and the next one is the holding company. Holding company, which means that it doesn't only mean holding the majority of shares in another company. It also represents the control that they possess in the board of directors of the other company. So they control most of the board of directors, or they have the power to appoint more directors in the majority of the board of directors in the company, which means that the board will act in accordance to their discretion, which means that automatically the holding company will have a control over the other company, which says that it holds the or controls the other company. So it has been defined under section 2 subsection 78. Okay. The expression company includes a body corporate. As per section 2, a subsidiary company or a subsidiary in relation to any other company means a company in which the holding company controls the composition of the board or exercise the control more than one half of the voting rights of together with one or more of the subsidiary company. Okay, so a holding company is a company which holds the company, and a subsidiary company, it is just the opposite of it, which allows it to hold. It will become the subsidiary company. And they're talking about deemed subsidiary company and all these things here. Here, deemed subsidiary company means if a public company public limited company is holding shares of a private limited company, the private limited company will become deemed a public limited company. So these concepts have been discussed here. So financial statements of holding company, few important things that we will see here. So we know what a holding and a subsidiary company is. Few characteristics, few points that we have to remember here is the financial statement. So the consolidated financial statement of the holding company is required to be disclosed in a prescribed detail about the subsidiary company, associate company, and joint venture companies. So this is important. So when a holding company is preparing its financial statement, it has to prepare two types of financial statements. One is the standalone financial statement. The second one is the consolidated financial statement. Consolidated financial statement will not only include the standalone, it will also include the financial statement of all its subsidiary company, associate company, and joint venture companies. So the financial statements of the holding company should have this. If the holding company has more than one subsidiary, if the holding company has more than one subsidiary, if the company has more than one subsidiary, associate company, or joint, it shall prepare a consolidated financial statement of the company of all the subsidiaries. Okay, irrespective of one company or two companies, consolidated will have all the subsidiary financial statements together. Separate financial statement of the holding company. This financial statement, in addition to the separate financial statement, the consolidated financial statement shall also disclose in the, both have to be disclosed in the annual general meeting. Disclosure of profit and loss account of the holding company. Profit and loss account of the company shall be disclosed. Dividends from subsidiary company. So all these information has to be disclosed in the AGM, and it has to be displayed even in the website of the company. So this is what has been specifically said about subsidiary holding company. Subsidiary company, again, which holds. There's nothing. You can just read it, and any doubts you got in this subject related also, you can just send me a text. I can reply to it, if not in the class also. And associate companies are those companies which have, where if I'm holding more than 50% of the stake, it becomes my subsidiary company. If I'm holding more than 20% of my stake, it becomes associate company. So 20 to 50 is associate company. Above 50 will become subsidiary company. So this is what is the, so 20% of decision making, 20% of board of directors, 20% of shareholding, all cases it will become my associate company. Okay. So the expression significant, in which means that an associate company in relation to another company means a company in which the other company has a significant influence, but which is not a subsidiary company. Okay. The expression significant influence means 20% of the total voting right or control or participation in the business. So that 20%. So few additional compliances if a company is an associate company. It would be considered as a related party. Section 188 will be applicable for all the transactions that are being conducted with an associate company. So an associate company will be considered as a related party. So that one thing they're saying. And section 129 talks about consolidated financial statement includes the financial statement of the associate also, that we've seen in the holding company itself. Okay. Then section 149, where persons cannot be appointed as an independent director in a company. So when we are talking about independent director, 149, if the particular person who is going to be appointed as an independent director in a company, if he's a promoter or if he's a director of, or if he's got any pecuniary relationship, or if he's an employee of an associate company also, even that kind of person cannot be appointed as an independent director in the holding company. So they're saying for independent director identification also, associate companies will be considered. Then comes section 192. If a director of an associate company want to do any non-cash transaction with the company, then they need to pass an ordinary resolution. This section provides for the manner in which the regulations or arrangement in respect of the acquisition of assets for consideration other than cash. So whenever a director of an associate company wants to do a non-cash transaction, because he is a related party, ordinary members' approval is required to be taken. Okay, that is what is said here, ordinary resolution. Such arrangement shall require prior approval by a resolution in a general meeting, and if the director or the connected person is a director of the holding company also, in that case, resolution approval is required to be obtained by passing a resolution in the general meeting of the holding company. Okay. So if I'm going to do a non-cash transaction, then shareholders approval is required in case I am a director in the associate company. And in that case, associate company members approval is also required. And if I'm a director also in the holding company, then members approval from the holding company is also required. So because I'm a related party. So these are all few points that you can have to remember about subsidiary company, holding company, and associate companies. Inactive company and dormant companies, we've already seen what a dormant company is and inactive company is. So we're not discussing too much into it. We've seen how to apply for a dormant status, MSc 1, MSc 2, MSc 3, 4, 5. We've seen all these things. Government company, again, we've seen more than 51% or more of the shares are held either jointly or severally by the state government or the central government. In that case, it will become a government company. However, the government company is subject to all the provisions of the Act unless otherwise specifically exempted from government companies. Government company may be formed as a private limited company or as a public limited company. However, the naming saying that private limited or public limited, they need not expressly show it in their name, whether it's a public limited or a private limited. So a name of a company shall end with limited, would be a public or private limited. The word state is allowed in the name. Transfer of shares, bond on share. Transfer of shares is all the same, but still you have to pass SH4 or something. Basically, if you want to transfer the shares of a government company, it has to be executed on duly formed a transfer instrument. Here the transfer instrument is form SH4. SH4 is a normally 2-page document where the transferor and the transferee will sign and execute it. So by signing and executing this SH4, shares can be transferred. This concept is applicable for all type of companies, not only for government companies. And anything else that is specifically for a government company, as per the provisions, in case of transfer of bonds issued by a government company, instrument of transfer is not required. However, for transfer of bonds, instrument of transfer is not required to be executed. So what they are saying here is only for transfer of securities, SH4 is required. For transfer of bonds, SH4 is not required. And annual general meeting. Every annual general meeting shall be called only during business hours and should not be on a national holiday. And it can be it should be at the registered office address or any other place that the company will decide. So this any other place as the central government may approve is applicable only for a government company. Other only during working hours, national holidays, a general provision which is applicable for all type of companies. And they also said that the registered office address only for normal companies, it should be conducted in the registered office address or the same place village, or if 90% of the members are agreeing, it can be held in any other place. So this is what for normal companies. Here what they're saying, if the central government say in any other place. So there's a small difference between other companies and a government company in this particular area. Declaration of dividend out of the accumulated profits. So they're saying if you have not declared the dividend, it has to be transferred to some reserves and all. So few provisions relating to dividends are not applicable in case of, so which say that deposit of dividend in a scheduled bank within 5 days from the date of declaration of dividend. When normally a bank, whenever a company is declaring dividend, that particular amount has to be deposited in the bank account within 5 days of declaration, and it has to be disposed to everyone. For a government company, they are giving exemptions. There are a lot of exemptions when it comes to government companies. One of such exemption here, that is, you need not open a separate bank account and deposit the dividend. You can directly transfer it to the particular shareholders from the company's account itself. Okay. So exemption from accounting standard 17 relating to segment reporting. So section 129 shall not apply to the extent applicable to accounting standard 17. Engaged in defense, to the companies engaged in defense production. So whenever I'm in my accounting standards, I have to specifically say, for this I've spent so much, this I've spent so much, the breakup, everything I have to give. Because government companies are normally into defense production also. When for those government companies which are into defense related activity, section 17, which is segment reporting, is not mandatory. They need not disclose. But it is not applicable for all government companies. It is only for government companies which are into defense production. And exemption for certain disclosure of requirements in the board report. Normally they say when there is a disqualification, it has to be reported. When there's any absorption of technology, it has to be reported in the board report. About CSR committee, sexual harassment committee, everything has to be reported in the board report. You would have studied. There are few exemptions for government companies, however, from reporting it into the board report, where the board report of the government company need not include the disclosure requirements contained in section 134(3)(e) of the Act, where the directors are evaluated by the ministry, or where what we are saying, the independent directors have to be evaluated, board valuation have to be done, and all these things, where the board of the independent directors will have to will evaluate the board, and the board valuation will have to be reported even in the board report. However, here for government companies, the valuation is done by the ministry of the or by the department of central government. Because they are evaluating that, that need not be disclosed in the board report. Appointment of more than 15 directors. A government company can have more than 15 directors. Such a company may, however, no longer require to pass a special resolution for appointing more than 15 directors. Normally for other companies, what we saw, maximum 15 directors, you can have more than 15 directors by passing a special resolution. But for government companies, this special resolution is not required. You can directly appoint by way of an ordinary resolution itself more than 15 directors. Then independent directors. the board will be substituted by who will appoint these independent directors, because we've seen up also uh, the Department of Central Government, which administers, which is in charge of the valuation here, will only appoint the independent directors also. Okay, appointment of directors. The requirement for seeking the consent of the director to be filed within 30 days in Form DIR 12. When you appoint, uh, again the appointment, the procedure of appointment, everything is done by the government itself here. Okay, and it has to be filed with the ROC within 30 days. These are all few things which I think you can read, and few appointment of managerial personnel, they say you have to follow as per schedule 8, but for government companies there are again exemptions when it comes to appointment of managing director and key managerial personnel. Here again the auditor appointment rotation is not applicable to them because it is appointed by the Controller General of India. So few things, yeah. So about government companies, basically there are a lot of exemptions which are given to these government companies. And anything that you would like to particularly explain in this, I will explain, or we'll go to the next chapter, because after government companies, this chapter comes to an end. Anything in particular that you want me to explain in this chapter? A particular holding company can normally invest in 2 layers of subsidiary companies. Okay. This Controller and Auditor General of India, what these people normally do is they only appoint the first auditor of the company. They only decide the tenure. They only decide the remuneration for the auditors. So they normally take care of all the audit related works. Controller and Auditor General of India will normally appoint for a government company, where normally it is decided by the shareholders in any other company. What is 2 layers? 2 layers is basically I'm a holding company and I have a subsidiary company, and that subsidiary company again will have another subsidiary company. The layers is called as the 2 layers. So Kabul has got a general question, not from this chapter. Can the attendance from meeting quorum be considered if the director is attending in it on a video conferencing? See, video conferencing attendance will also be counted for quorum. Okay. When you're counting for quorum, even video conferencing will be considered. And Marian, can you explain subsidiary and associate company in a nutshell? See, subsidiary company is something whose control more than 50% of the shares or the board of directors or the decision is controlled by some other company, will become a subsidiary company. Okay. Associate company is from 20 to 50. Okay. More than 50 will become subsidiary. 20 to 50 will say significant influence. Okay. So wherever there's a significant influence, which is 20 to 50, I will become an associate company. Okay. So this is what it is in a nutshell. Can a subsidiary company A Limited itself be a holding company of C Limited? Yeah, it can be. A, B and C both are subsidiary companies. It can be. Akshita, please conduct the classes on WebEx. No decision that I can take on that. Can you please explain the holding company once again? See, when I'm when a company will be called as a holding company, it doesn't mean only on equity. Yes, if I'm going to hold more than 50% of equity shares in another company, voting right in another company, that will become my subsidiary company. I become the holding company. When apart from shares, I'm not holding even one share in that company. However, I am controlling more than 50% of the board of directors in that company, or I am having the power to appoint more than 50% of directors in that company. In that case, uh, I will become a holding company even though there is no equity participation. When does a small company cease? So there is no seizure, there is no closure for a small company. You will have to, uh, you will no more be eligible to avail the facilities of a small company. Okay, you will not be considered as a you will not be considered as a small company if the threshold limits of 2 crores of turnover uh, and or 50 lakhs of paid up capital, if any one criteria is going to exceed also, you will no more be eligible to be called as a small company when the threshold goes. Durga has a big doubt. What is mentioned is, can an independent director be appointed if his relative is an employee? In the act, it is like this: holds or has held the position of KMP or has been an employee of the company or its holding subsidiary or associate company in any one of the three immediately preceding financial years in which he is proposed to be appointed, provided that in case of a relative who is an employee, the restriction under this clause shall not apply for his employment during the preceding 3 financial years. Here, what they are saying here is, Durga, your question was, can an independent director be appointed if his relative is an employee? Okay. An independent director a person cannot be appointed as an independent director if his relative is is an employee in that company. The first answer is this: a person cannot be appointed as an independent director if his relative is an employee in that company. Okay, so he can't be appointed. However, his relative resigned from that company. In that case, I can immediately become an independent director. Okay. Here, what they are saying, that continuous period of 3 years is not applicable for a relative. But in the same case, if I was a relative, if I was an employee in that company, and if in the past 3 years and I've come out of the company now, can I become an independent director? Answer is no. I should wait for 3 years of cooling period. That 3 years is applicable only for me if I was an employee. It is not for my relative. If my relative is an employee and if he or she has resigned, immediately I can become an independent director. This is what is explained in the act. Durga, am I clear? Durga? Yeah, good. Ruchita, is it practically possible to appoint 50% of the board without having shareholding? Yes, it is practically possible. Everything will be within my group companies only. Okay, everything will be within my group companies only. Or in cases, what will happen? I would normally say I would have given debt capital, not as equity capital. Okay, and I still have a major stake in that company. In all these cases, yes, it is possible. Uh, the chairman will be the common chairman for all the companies. Even though I don't have equity participation in the other company, I still control that company because it is one of my group company. Can two brothers can do work in the same company? Of course they can do. There's no restriction. Okay, so let's go to the next chapter now. 1 second. Formation of LLPs, we've already seen what an LLP is. So going to the next one is different forms of business organization and its registration. Okay, 6th chapter. We'll be seeing that now. Okay. Just covering all chapters so that we don't miss anything. Someone is asking, is there any restriction on a holding company under legal proceedings? What kind of restrictions are you specifically asking? Example. Okay, you just type and keep. Well, let's go to the next chapter now. Okay. Okay. So different forms of organization and its registration, 6th chapter, which normally specifically talks about four different types of organization, which is sole proprietor, partnership, HUF, and a society. Okay. Quickly, we already know what are these things. We will see few characteristics and important points which are relating to these particular type of companies. Okay. In the first chapter itself, we've seen that there are many factors that will influence on deciding the exact type of entity that we would like to select, like the nature of the business, size of the business, the capital criteria, profit sharing, taxability, geographical location, managerial capacities. So we've seen broadly 16 items like this, which will the risk that is involved, the liabilities that might come, vulnerability to litigations. So we've seen all these things, basically different factors that would normally determine in selecting the best type of entity. So I'm not going to explain this again to you. Let's go to this chapter. Mainly deals with the following types of organization. One is the sole proprietor, partnership, HUF, multi-state cooperative society. Okay, let's start with a sole proprietorship. Sole proprietorship. So majority of business in India happens through sole proprietaries only. There's no separate registration that is required for these sole proprietorships. The management, the ownership, the control will remain with the same person. He need not conduct a board meeting to decide on something. That is what is the management or the decision making. Everything, whatever he wants to do, he can do by his own. There's no control. So the entire ownership belongs to that sole proprietor only. Okay, so this is what has been said here. So the business and the proprietor is one and the same. So there's no separate legal entity concept and all here. The assets of the proprietor only is the assets of the business, and there's no legal formality to be established. However, there are certain other types of registrations which normally a sole proprietor is required to get registered under. Like we've seen under the mandatory type of registrations, the Shops and Establishment Act, the professional tax, MSME registrations, GST, SSI, intellectual properties. If you remember the initial registrations in classes, we've seen all these type of registration. So these registrations can be done by a sole proprietary in order to do his business, because even for a private limited companies, those registrations were required, because first I get my entity status and then I get various registrations in order to do business. The same kind, my entity status as a sole proprietor is a sole person. So I don't have any separate registrations which have to be taken. But to do business, I have to get registrations under Shops and Establishment Act, professional taxes, GST. All these things will anyways be applicable even to a sole proprietor. So some of the merits are easy formation, better control, self-explanatory. So I'm not explaining it again. Sole beneficiary of the profits. Concessions from the government is applicable for small businesses. Inexpensive management. The limitation on the managerial skills, because only I am going to do everything. I cannot have, any person cannot have expertise in all fields. So there will be a limitation on management skills. Limitation of resources, which means that I can infuse only my funds And banks will also not prefer giving me more loan and all because I'm a sole proprietor. So there will be a limitation on resources, unlimited liability, lack of continuity, because if something happens to me tomorrow, there's no one to take care of the business. Lack of continuity. These are few things about sole proprietary. Going to the next one is partnership. Partnership is an association of two or more people who are having like-minded thought, who are contributing something in the form of contribution in cash or in kind, and they are deciding to do business and share profits. This is what normally partnership is of. Minimum 2 members, maximum up to 20 members a partnership firm can have, where no provision is made by contract between partners for the duration of their partnership, or for determining the partnership will be at will. So there are different types of partnership based on the duration: partnership at will, particular partnership, general partnership. So I'll explain all those different types. So they're saying, when I explain about those concepts, you'll understand this third point. All the partners are jointly liable for all the liabilities. So the liability here again will become unlimited. Suppose if there are 3 partners, if one partner dies, the partnership can either get dissolved, or I can approach the legal hire of the deceased partner with his concern, after settling the dues, whatever is required to be settled to the third deceased partners. I will settle it to the legal hire, and then the remaining 2 partners can continue. And if there are only 2 partners, the partnership will get dissolved. However, it has to be settled properly with the legal hire. So liability and dissolution happens only when all the members agree to dissolve the partnership, or it will happen once when there are only 2 partners. When the other partner dies, it will come to a dissolution. Some features is existence of an agreement. Agreement is mandatory. Either it can be registered or unregistered. However, if it is an unregistered, few drawbacks are there, like I cannot file a case against, I cannot sue, or someone else cannot sue. Getting loans also will become difficult. So it is always preferable to register your partnership firm. Okay. Engagement in business. So what kind of business activity can I do as a sole proprietor? I can do both goods and services related activity. Sharing of profit will be as per the agreement only. Agency relationship, principal as well as the agent, because they are only managing the company and they are only owning the company. So the principal and the agent is one and the same person. Unlimited liability, common management, restriction on transferability of shares, only when all the partners agree, shares can be transferred, and registration is optional. Duration, it comes to an end only when it becomes insolvent, or the purpose for which the partnership was formed is being accomplished, or when one person dies or one person retires. In all these cases, partnership will come to an end. Okay, partnerships are basically can be classified in 3 broad types. One is partnership at will. The second one is particular partnership. The third one is partnership for a fixed duration. What is partnership for will? Whenever there is no particular time period which is specified, we are going to form for this purpose, our partnership is going to be for so many years. If there's nothing specified, the partnership will be at the will, which means that the partners can dissolve this particular partnership as per their will. Okay, this is partnership by will. The second one is particular partnership, where the partnership will be for a particular objective, for a particular project. Only for that project I am registering this partnership. So that is a particular partnership. Third one is for a particular duration, fixed duration, like for 10 years or 15 years. At the time of registering itself, we will mention it in the agreement. This partnership will be only for this particular duration, or for 1 year, 2 years, whatever it is. These are the types of partnerships. And types of partners again can be broadly classified into 3 types. Active partner and sleeping partner. Every one of you know, partner who has invested the money and also involves in the management is the active partner. A person who has invested but does not involve in the management is called as a sleeping partner or a dormant partner. And the third one is nominal partner, or partners by holding out. These 2 partners are basically, they have not contributed anything and they don't get into the management also. But from an outsider point of view, he will be seen as if he's a partner in the company, like deemed partner. So these 2 partners will be liable in case of litigation, and will be liable in case the partnership firm takes a loan, and if they are not able to repay the loan on time, even this nominal partner and partners, by holding out, these people, even though they are not actual partners, they will be liable to repay the loan, because from an outsider point of view, they are looked as if they are partners in the company. Okay. Can a minor be admitted into the benefits of the partnership firm? A minor is a person who has not attained the age of 15. Since a minor is not capable to enter into a valid contract, he cannot become a partner in a firm. However, he may be admitted for the benefit of an existing partner. However, be admitted to the benefits of the existing partnership firm. Okay, where we are saying he is not he cannot become a partner however the benefits which are coming from the partnership, for that portion alone he can be enjoyable after he attains the age of 15. So they can have clauses like this. Even a minor, we can say he can be, once he attains the age of 15, we will accumulate all the profits and keep. Once he attains the age of 18, we will give him the share and he can also become the member. Okay. So until then, a minor cannot become a partner in a partnership firm. So registration is optional. However, it is recommended. This is what I told you initially itself. Because disputes also will normally, when I am going to enter into a partnership firm, we will have a common understanding with my partner saying that this will be the terms and conditions. You will do these activities, I will do these activities. Suppose he's not doing those activities, I will start getting irritated, but I cannot file a case against him. There will be disputes. Then what will he say? No, we didn't even agree for it. So there should be an agreement and it should be registered. Only then, if there is disputes, I can go to a court and it can get resolved properly. Okay. And the procedure here, again, I have to get registered with the registrar of firms. Registrar of firms will be in the sub-registered office only. And even partnership agreement has to be executed on a stamp paper. Again, stamp paper will again differ from state to state on their stamp act. Okay. List of documents to be submitted to the registrar along with the partnership deed is an application for registration in Form 1, a duly filed affidavit, copy of the partnership deed, proof of the owners, proof of the place of business, registered office address details. Okay. Merits and demerits of partnership firm. Merits is easy to form. Pooling of financial resources, because for sole proprietary, I saw whatever money I have only I can use it. Here I can use even my friend's money. So pooling of resources, pooling of managerial skills, balanced business decision, because we discuss and take balanced business decision, sharing of risk. Limitations, duration, uncertainty, risk of unimplied authority. If others do some mistake also, the other partner also will get affected because of that. Risk of disharmony, not agreeing due to rigid attitude. Most of the time, because decisions have to be taken in a meeting, but we don't come to a consensus, we don't make decisions fast. So that is possible. Difficulty in withdrawing from the firm. Withdrawal of one's capital require the other's consent also. If someone is saying I'm going out, then the other concern is also required. Lack of institutional confidence, because many people are there. Lack of institutional confidence. Difficulties of expansion. Okay, so these are basically the limitations which is coming to a partnership firm. And the key ingredients, what will normally a partnership firm will have: the first party, the second party, the objectives, the contribution, the accounting standards that they're going to have, what is your duty, what is my duty, how we can exit from the partnership firm, and what will be the duration for it, and how can we dissolve it in case there's a dispute, how we will resolve it by way of arbitration or what. So all these things will be normally the particular ingredients of a partnership firm. Okay, just imagine you and your friend are going to enter into a partnership firm. What all clauses are you going to have? Will form part. There's no prescribed format like how for companies we had table A, table B and all. For partnership firm, there's no prescribed format for partnership deed. It is left to our imagination. But the standard formats are these things, whatever I've said. So for the name clause, the object clause, the situation clause, the accounting standards, duties and liabilities, dispute resolution, dissolution. All these things are common standard formats. Going to the next one is Hindu undivided families. Okay, so we would know only little about when we talk about Hindu undivided family. Basically, common family members doing some business together. But there are a few things what we can say about Hindu undivided family. Few points that we can discuss here. Okay, so okay, it's again 1 hour. It's been that we're discussing Hindu undivided family. We'll discuss after say 1-2 minutes small break. Okay, we'll have a small break for 1 to 2 minutes, and then we'll discuss about what a HUF is. Okay, there are few points which are unknown to us with HUF, which are like very interesting to be known. We'll see after the break. Okay, 2 minutes small break. Yes, I'm back. We'll see if any questions are being asked, and then we'll continue. Uh, Sachin, you mentioned as 50, right? Maximum number of partners is 50. So even I had the confusion. As per 1932 Act, as far as I've seen, because I one two times cross verified with that also. Uh, as far as I've seen, it is mentioned maximum 20 only. But when you're writing an exam, it's safer for you to mention it as maximum 20 as per 1932 Partnership Act. Okay, if you're mentioning 50, then you have to specifically show, or if you know where it is mentioned 50, you can tell me when I will try to learn something new. And the next question, can the partnership deed between A, B, and C mention that C will have limited liability? Hmm. It will, you can mention that way, but if the banker normally feels like attaching even his property, the bank will still have the power, because the entity by itself uh, is an the concept of a partnership firm itself is an unlimited liability. So even though I within myself I say no, you have only limited liability, that does not make give me that comfort to have actual unlimited liability. For example, there is some liability and it has to be shared among three partners. In that case, sharing among between those three partners, C will say that, see, you already said it is only limited, so I will not share the entire loss. I will share only so much of loss. That can happen. But when the liability is going to a banker and he is taking some insolvency action against you, the third person will also be liable with unlimited liability. Uh, this is what is my understanding, because I'm saying this because uh, Companies Act has general provisions and my MOA AOA can have provisions which are not contradictory to the act. Similarly, uh, when I'm going to have a partnership act and when I'm going to have an agreement, my agreement should not be contradictory to the partnership act. When the partnership act is saying it's unlimited liability, then how can my agreement say no limited liability? Okay, so since it is contradictory, to the extent of loss sharing between the shareholders, that clause can still have some value for it. But when it goes to a banker for liquidation, I don't think that clause will have a valid protection. Okay, and if a partnership firm is registered, is there any kind of registration number like SIN number? Yeah, you will get a firm number. You will get a firm number. Like SIN number, you will get a firm number. And what is a partner by estoppel? Normally, the say doctrine of estoppel. This estoppel normally refers to I cannot say no. Okay, it is like that. It is basically, I don't know, because everyone from a lot of places are there. In Tamil they say தவிர்க்க முடியாத. In other languages I don't know exactly what is the translation for it. Uh, you cannot say no for it. By default, I will be treated as a partner. That is only partner by estoppel. The places where it is used, it will have its own impact. Okay, so it is by default I'm a partner. That is what is estoppel. Okay. Sohan Doshi. Yes, you're right. Sohan Doshi is right. This minor partner, we were talking about, can a minor be a partner and all these things, no? Correct, even I recollected now. See, minor can be a partner, but only for profit sharing, not for loss sharing. Correct, Sean. I'm sorry for that time I didn't explain it properly. Shohan Doshi, you're correct. So minor can be a partner only for the profits. Correct. Good. Difference between nominal partner and partner by holding out. See, nominal partner I'm nominal partner. I voluntarily lend my name. You can use my name as partner, but I don't want any partnership. I'll not give any contribution, but I lend my name. You can say I'm your partner. But partner, by holding out, he is not lending his name. But when the other partner is saying he's also our partner, I'm remaining silent without talking anything. In that case, I will be called as partner by holding out. Because I was silent, I will be liable. I should have said, no, 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 I'm not a partner. I have not said take my name also, but I have not opposed it also. In that case, I will be called as partner by holding out. Okay. Designated partners will get extra profits. See, designated partners will get salary. Okay. They can take salary, they can draw salary apart from the share in the profit, because designated partners are taking care of the management. They can also take salary from the LLP. So Kabul, there's a doubt. Though I am not a partner on paper, but I am acting on behalf for firm as if I am a partner, then it can be partner by holding out. How it is different from nominal and holding? I've explained some time back, no? What is nominal and Shankita, startups and all, I'm not going to take. Uh, that will be handled by some other faculty. Okay. See, see, how does normally ICSA ask questions is, you have to be, you need not mug up all the concepts and all these things. Okay. Uh, as far as I've seen, when I was also a student, I was also writing my executive level, professional level, and after writing also, I've been seeing the past question papers. How I normally see how questions are being asked is, they ask you from practical point of view, and they will test whether you have understood the concept or not. That's all. They don't expect you to write, for example, what are the factors that will determine you. They don't expect you to write all 16 points and then explain all 16 points big way and all these things. Whether you understood it or not, why these factors play an important role, or in this partnership firm, why these concepts are there. So each and everything conceptually, you will have to be able to understand and write. If you can prove to the invigilator, that examiner, that you have understood the concept, he will make you to pass. If he feels that you have not understood the concept, he will not make you pass. Simple as that. Okay. So again, all repeated questions. So we'll again continue with the class. Hindu undivided family keynotes. Okay. So the laws that govern HUF are not codified and read, but it can be read along with Hindu Succession Act and Income Tax Act. There's no specified act, like for partnership there is a specified act. For HUF, it are not codified, but it can be read along with Hindu Succession Act and Income Tax Act. What are the acts that govern HUF? You can write these two acts normally govern. You can take provisions from these things to understand. Okay, the membership of this firm, of this form of organization, cannot be acquired. It can be only by birth or by marriage of a male person who is already a member in this family. So how can you become a member? It is not like going and buying some shares. It is only by birth or by getting married to a male person in that family, I can become a member in that HUF. Okay. When two or more families agree to live and work together, which means that They should live and work together. Two or more families live and work together, throwing their resources, labor with joint stock, and share profits and losses together. Such families are known as composite family. So you can say, what is a composite family under HUF? When two or more families live and work together, who share profits and losses together, it is a composite family. Then there are two schools of Hindu law. One is uh, Dayabaga, which is prevalent in Bengal and in Assam, and the other is Mitakshara, prevalent in the rest of the world. According to Mitakshara law, only the son has the right on the property. However, Dayabaga, even girls have right on the property. Now, there's a lot of changes which has happened in the Hindu succession law, where they've given even equal opportunity to even girl children. Okay, but okay, what is Mitakshara and Dayagara? You can Dayabaga, you can write still. What is the difference? And the head will be called as the Karta. His liability will be unlimited, while the liability of the other members are limited. So HUF, very important to be remembered here is the liability of the Karta is unlimited, whereas the liability of the other members still remains limited. And the characteristics governed by Hindu law. When we talk about Hindu law, Hindus include Hindus, Buddhists, Jains, and Sikhs. According to Hindu law, Hindus also include Buddhists, Jains, and Sikhs. And management is done by the family, and the decisions are taken by the Karta. Membership I saw by birth or by marriage. Liability we saw. Permanent existence. Implied authority of the Karta. So, Karta only makes all decision makings in the company. Minor also to be a partner. Dissolution only at will of all the members. Okay, minor also can be a partner. Dissolution will happen only at the will of the member. Just 2 minutes. I'll just be back in 2 minutes. Or 1 minute. I'll be back in 1 minute. Yeah. And the postman came, no? So I didn't wear my mask and go. So I started to feel I am getting some cold. I just went to sneeze and I came back. Just washed my hands again. 1 second. Yeah. Maybe after the class, when they get back home, I'll take some steam. I'm not audible. Ashik Vijay, Corona will be known only after 14 days now. Okay, we'll continue. I'll share my screen. 1 second. Okay, so dissolution at the will of all the members. So what is the registration process for create a HUF deed executed on a stamp paper. So this is something that we don't know, most of us, how to register a HUF. We would not have mostly read about it. So even HUF has to be executed on a stamp paper. So the eldest male will become the Karta. The eldest male will become the Karta. Name of the HUF shall have the Karta name followed by HUF. Okay. So for example, Mohanlal HUF. Okay, Mohanlal is the Karta's name. Okay, the name of the HUF will have the name of the Karta followed by the word HUF. Okay. Also state the capital of the HUF. A declaration is also provided by each member of the family where they declare that the name of the Karta, also state that the Karta has the authority on the accounts vested in his hand. Karta holds the right to govern all the transaction of the HUF on account of the members. So they have to give a declaration saying that Karta can do anything on behalf of the members. So rubber stamp to be prepared and should be in rectangular shape. See, they're saying the shape also. A rubber stamp has to be prepared and should be in rectangular shape and should be affixed in all the documents of the HUF. To be notarized. Okay, notarized is basically there will be advocates who have completed certain years of experience, like 10 years. They can get this notary public license where they can start putting their notary. Notary is also like a stamp. Okay, obtain PAN, open a bank account, and you are set to PAN will be in the HUF name, Mohanlal HUF name. Okay, so this is the registration process. And when we talk about the benefits of a HUF, easy to start, efficient management, secrecy, prompt decision, economy of skills, because everything, see, when we are doing business, I need not pay for employees and all these people separately, all my family members only. I just give them food, that is enough. Just for understanding, I'm saying, again, they'll have some profit sharing for sure, but economy, you need not think too much. You can do business at home itself. So it saves a lot of money for you. Credit facility, since Karta is liable for unlimited and he has more contacts, I can get unlimited liability also. So there will be natural love between the members, freedom regarding the selection of members. Okay. Multi-state cooperative societies are basically, these are also societies that are registered under the Societies Act and which are performing in more than one state. When we talk about more than one state, it will normally at the initial stages, I can start performing only with my nearby state or with the other nearby states. And slowly, once my operations exceed, I can become pan-India wise. Okay. So this is how it's governed by Multi-State Cooperative Societies Act 2002, which was earlier called as 1984 Act. Okay. So Multi-State Cooperative Societies Act 2002 regulates it. The Act facilitates the incorporations of the society whose objects and functions spread all over several states. The Act provides for the formation of both primary as federal states. When we talk about primary, both individual and institutions will be members. When we talk about federal cooperatives, only institutions can be members. Okay. So who can be members? Individuals and institutions both can be members. The main objective is social and economic betterment of their members. The concept I told you earlier also, societies are normally formed for the benefit of the members and the local people who are situated in that particular locality. Multi-state cooperative society is a body corporate with a limited liability. So even it has a limited liability which has a separate legal entity concept. Multi-cooperative society is a body corporate with limited liability. No part of the funds other than the net profit shall be distributed among the members. However, societies by itself is a not-for-profit organization, so it should not be, the net profit shall not be, no profit, no part of the funds other than the net profit shall be distributed among the members. So, however, for a multi-state cooperative society, they're giving an exemption where they're saying that not all the funds, but the net profits can be distributed to the members. Then coming to investment of society's fund only in recognized securities. I cannot invest in any society. It has to be government recognized, government bonds, government security, RBI released bonds, national savings schemes, investing in public financial institutions, in commercial banks, in FD, in PPF. So only recognized contributions are available. Contribution to political parties or loan to non-members or borrowing from external sources are prohibited. So political contribution, loan to non-members or borrowing from any external sources are prohibited. Okay, annual audit becomes mandatory even here. Central government may direct for special audit if they feel there's something wrong going in the audit, which is going wrong in their firm. And application for registration should be signed by at least 50 members from each state. And in case of federal cooperatives, a representative of at least 5 societies from each state has to sign. Suppose if I'm going to have it in, say, Andhra Pradesh and in Orissa, in that case, what I have to do is from Andhra Pradesh, 50 members have to sign, from Orissa, 50 members have to sign, and then I have to make the application. If it is a primary cooperative society, if it is a federal cooperative society, then at least 5 societies from Andhra, 5 societies from Orissa have to sign and give, and after that only I will be able to make a application for registration. Okay. So what does these societies normally do? Society, this is what I was telling. Cooperative societies, they are trying to bring even this under the purview of RBI. So what they do, they normally give loans to its members. So it provides loans at a very reasonable rate of interest. It can function in pan-India ways, low cost of compliance. Members are both customers and owners of it, because they can give loan only to their members, they become their customers. So they are customers and owners, that is why. And okay, so this is it, and this chapter gets over with this. So an application in Form 1 of Rule 3 of Multi-State Cooperative Society should be filed with the Central Registration Cooperative Society, New Delhi. So since it is an interstate cooperative society, this has to be filed with the Central Registrar of Cooperative Societies, New Delhi. The application should also should be approved within 4 months by the Central Registrar. If not, it shall be treated as deemed approval. So within 4 months, the application should get approved. Okay, banker certificate. So what all will be form part of this application is banker certificate stating that there is a favorable credit balance in the proposed society's name, scheme explaining how the current project will be viable, 4 copies of the bylaws, proposed area of operation, at least 50 members in each state have to sign, certified copy of the resolution and the corresponding address, contact number of the promoters or the governing council people. Extra enclosure for society providing credit facility. If my society is only doing some welfare activity, upliftment activity, or facilitating the trade of my members, then only these are required. However, if my society is also into providing credit facility, my society is also doing credit activity, in that case, I am supposed to do even these type of things, like even 2 extra certificates are required, like no objection certificate from Registrar of Societies of the state or the union territory where they are staying, and a certificate stating that the promoters are verified by the concerned state authorities. What they are saying is, whenever I'm going to do funding related activities, since RBI is not regulating me, what I'm going to do is I have to get the approval from the registrar of both the states, and the registrar should also certify that I know these promoters, they are good persons, they have good reputation. Okay, so I have to get even that approval, and I have to submit it to the central registrar, and central registrar will approve. So I have to get a certificate from the and also a no objection certificate from the concerned state authority and submit it to the central authority. So with this, the societies is also completed. Okay, and can a society accept FD from its members? Yeah, it can accept. Cooperative society, banks and all are there, no? One second. Now let's see next what chapter is pending, and then we will continue. Okay. Just going to the next chapter. Different forms of business organization is completed. Formation of NGOs. NGOs is also completed. We saw no trust, society, and Section 8 companies. This chapter is also over, which is formation and registration of NGOs is over. Then financial service organization and its registration process is also over. I think all chapters which I've agreed to take is completed. Registers, correct. Registers is not over. No, we'll see what registers and all. Wait 1 second. Business collaborations and all I'm not taking. Conversion of business entities I'll not be taking. Various initial licenses and grants that I've already taken this chapter. Let me search 1 second. No, startup and registrations, IPR I will not be taking. Alteration of MOA and AOA I've already discussed, Durga. Labor laws I have not agreed to take because Factories Act, Sohan Doshi. See, Factories Act basically the most easiest chapter labor law is Factories Act only. It defines basically, it can be broadly classified into 3 types: health, welfare, and safety. Okay. Again, explaining it would take time. Yeah, because 2 faculties will be handling. I've agreed to take a portion, and the other faculty will be taking the other portion. What type of partner can be designated partner? Can a sleeping partner or sleeping partner, nominee partner cannot be designated partner. See, designated partner will be an active partner. Okay. Should normally be as an active partner. I think then you can ask any doubts if it is there, and then we can end for today's class. If something is left over and anything on all these things, what I can do is I can take in the next class, and specifically if you want, because the next class is my last class. Okay, the next class is my last class, specifically because whatever I've agreed to take, I've taken off. Specifically, if you want me to take any 1 or 2 chapters, that alone you put it in the chat box. I will try to cover that in the next class. I will just speak to institute once. If you want me to take any chapter specifically, I will take it. Okay, and if anything is left over in my classes, in my chapters, whatever I thought of taking, I'll just check once. I will try to cover that also. Okay, so next class will be the leftover whatever, and anything that you want me to take in specific, I will take that. Okay, I will just see what is and any questions you want to ask simultaneously, yeah, you can ask. It is said that promoter is a quasi agent. What does it mean? See, I will just tell you what does a principal and an agent mean. Wherever this is being used, we'll have to just try to understand in that particular concept. Uh, when I am going to own the business, I am called as a principal. When I'm going to manage the business, I will be called as an agent. Okay. When I'm called as a quasi agent, which means that I am owning the business and I'm also having some portion over the control. So promoters are also called as quasi agents, which means that they have some say in the management of the company also. So because they are deciding the management activities, not only investing, not only having the whole, they are called as quasi. Okay, again, the particular area where it is used, the meaning can be taken in that way. ICSI question paper. Okay, past question papers we will discuss in the next class because I don't have the question papers with me. If anyone has specifically any questions that are asked in the past question papers, you can ask me in the chat box now. Next class, what I will do is I will try to get the past question papers and we will try to discuss few questions from that past question papers. What questions are asked and how do we answer them? Next class we will see. See, for people who are normally doing self-study and all these things, I would prefer you to have have a note with you, and whatever you're studying, just take notes of it and you keep it along with you. Before the exam, see your notes and you prepare. Okay, because when I was studying my executive, I had the securities management paper, and my bike got punctured in between when I was getting back home. And after doing the puncture and all these things, by the time I got back home, it was 8 o'clock. I ate and I thought I will get up early morning at 2 o'clock or something and start studying. But I got up only at 7 o'clock and then I had to rush to the exam again. So I was studying only in the signals. Wherever I stopped in the signal, I take the note, I study. But the notes was very useful for me. I got 57 marks in that exam. I was able to actually recollect even in the last minute because I started studying from my own notes. So whenever we write our notes and we study from our notes, it would be very useful. It would be very easy for us to understand at the exam time, last time. Okay. Registers and records. 1 second. Registers and records. Registers and records. Okay, got it. Handwriting problem. Running writing is okay. See, running writing is okay. See, whenever you're writing, whenever we are writing in the exam, you have a particular handwriting with you, okay, and you cannot change that handwriting for sure. How much ever you try to improve, when you're writing fast during the exam, your old handwriting will come to it. Only in the first page or the second page you can have your handwriting. As and when you keep writing fast, your handwriting will change. So what I would normally prefer you to do is have a pattern of writing. You take an A4 sheet, and in the A4 sheet, on the left side, on the right side, you have a particular margin. Okay. Beyond that, your wording should not go. And the size of your font, how much you're going to write, the size of it, and the gap between each words, how much you're going to give, the gap. Okay. And the next line, and the above line how much gap it is going to be there. Okay, so the gapping, the spacing, and the alignment, just concentrate on this alone. Handwriting plays a very, very, very important role for you to get good marks. So if you can improve your handwriting, good. If you're not able to improve it, at least align your wordings properly, present it good. And whenever you're writing a answer, don't start the second answer from the same page where it is ending. Start it in a new page. Okay, you will get additional sheets. So don't try to finish everything in your main sheet itself. Each answer, write it in each sheet. Don't mix it up and write. Okay, and you can refer scanners. Scanners are really useful. You can refer scanners because that has all your past question papers. There will be even though people try to make any changes in the questions that are being asked, there will be a hidden pattern in all the questions that are basically asked. Similar type of questions only will keep coming. Scanners will actually help you to understand in that. OMR papers, one word questions. So 20 minutes is there. Maintenance of registers and records. We'll quickly see certain things in this. Whenever we do any particular activity, there are certain types of registers that have to be updated simultaneously. For example, whenever I'm going to include some members in my company, my members register has to be updated. Whenever I'm going to do some whenever I'm going to conduct meetings, it can be a board meeting, it can be a shareholders meeting, my minutes book have to be updated properly. When I'm going to do any related party transaction, my register of contracts have to be updated properly. When I'm going to take a secured loan, my charge register has to be maintained properly. So all these things you have to, when you see, it has, for every separate transaction, separate registers are required to be maintained, and it is mandated by the particular provisions of the Companies Act. And where do we maintain these registers? It has to be maintained only at the registered office address. Okay, so here what we are saying is, various provisions of the Companies Act has made it very clear that every company governed under the Companies Act are required to maintain statutory registers until the dissolution of the company. Some important requirements relating to register is, register needs to be kept at the registered office address of the company. Some registers have to be kept open for inspection, say for directors, for members, for creditors, and certain registers can be taken copies also. By paying some small amount, they can take copies also. So whenever, for example, annual general meetings are conducted, the register of members, the financial statements, and register of charges, all these things will be open for inspection. Members can come and they can see and go. Okay, members register, the minutes of the annual general meeting can be inspected by the members. They can take copies of the minutes. So all these things are open for inspection, and company may also provide copies if demanded by the directors by making some payment. Okay, hence it is important for all companies to maintain registers. So let us see few basic registers that a company is supposed to maintain. All these registers are mandated by particular sections. The section numbers are also very well given here itself in the site. So we'll see register of members, and this is form MGT1. So whenever I talk form MGT1, say 1 second, just stay online 1 second. See, basically this is basically how my register will look like. Okay, in this, if you take form MGT1, that is the members register. You can see here it is written MGT1. So I able to see MGT1, it is written here. So this is how the register will normally look like. This is how the register will normally look like, and we have to enter all the details relating to that particular member in this. Similarly, you will have separate sheets. If you see here, you have separate sheets for each type of register. Okay, this is how normally the register will look like. And again, apart from the separate sheets, if you want, you can buy books also separately. Okay, so that is what is a register of members. This MGT1 is the format, because I showed you right on the top, it was written MGT1. SH4 we saw some time back is for share transfer deed. SH1 is your share certificate format. So similarly, MGT1 refers to the format, particular format in which the members register has to be maintained. Okay, it is specifically said in section 88. Section 88 normally talks about members register. Okay, MGT2 talks about other security holder register. Other security, so this MGT1 is equity, MGT2 is others. Okay, MGT3 foreign register of members. So foreign holding will be maintained in MGT3. Then register of directors and key managerial personnel. So who are directors of the company, when they have appointed, when they are removed, who are the KMP, so company secretary details, CFO details, CEO details, all these things also will their shareholding in the company. Okay. Index of members, we've already seen if there are more than 50 members in the company, then index of members have to be maintained. Similarly for debenture holders, index of beneficiary owners, who is a beneficiary holder. Normally shares will be held in my name, but the dividend and the voting right will be enjoyed by someone else. I am the owner of the share, but the dividend and the voting right is enjoyed by someone else. He is called as the beneficial owner. Okay, so when these kind of arrangements will be taken as, for example, there are wholly owned subsidiary companies. When we take about wholly owned subsidiary companies, which means that the 100% of the shares are held by the single person. But for a private limited company, minimum 2 members are required. When all 100% are held by only one person, then the minimum 2 member criteria is not getting satisfied. For namesake, I will have one more person as member. Okay, he will for namesake hold the shares, but the beneficial owner will be that company. Okay, so in these cases, beneficial ownerships will come. In certain other cases also will be there. In order to not to show direct ownership in the company, certain people will have these arrangements of beneficial owners. So when you see directly on prima facie looking at the ministry website or the MOA and AOA, I will not be able to understand he is the owner of the company. Okay, but however, beneficial holders have to be intimated to the ROC in MGT4, MGT5. There are certain forms for it. Okay, so whenever those kind of people are there, register of beneficial owners. Whenever I'm issuing duplicate share certificates or issuing any new share certificate, reissuing share certificates, it has to be mentioned on this day I issued a duplicate share certificate, because that there will be one more share certificate. I should not get confused. Whenever I am issuing or reissuing duplicate share certificates, register for sweat equity shares. Whenever I'm issuing shares to the employees of the company, it is called as sweat equity shares. It will normally be lesser than the rates that are normally given to outsiders. You would have studied shares should not be issued at a discounted rate, but in case of sweat equity shares or conversion of debt into equity, I can issue shares at a discounted rate. Register of employee stock option scheme. Whenever I'm doing for ESOP, simultaneously, whenever these activities are happening, what I'm supposed to do, simultaneously I have to maintain in the register also. Okay, register of shares or securities bought back. Whenever I do a buyback, I have to do that activity, simultaneously update the register. So whenever you're writing in the exam also, whenever what is the procedure for buyback, what is the procedure for ESOP, the last step you should also write simultaneously update the stock option register, update the buyback register. Okay, because this is mandatory. Register of deposits, register of charges. So whenever I take a secured loan, the assets of the company, register of charges have to be updated. Register of loans, guarantees or securities, okay, or acquisitions made by the company. Whenever I'm giving loan beyond 60% of my paid up free reserves and security premium account, or 100% of my paid up and free reserves, those kind of loans. It doesn't mean all loans, okay? Only those kind of loans have to be entered in MBP2. Register of investment not held in the name of the company. Now the company is a beneficial owner, someone else is a beneficial owner, we have a separate register. When the company is a beneficial owner, in MBP3 I have to make the filing, and MBP4 register with related party contracts, okay, in which directors are interested in. This also has to be maintained. Apart from these registers, few other books such as minutes book. For directors meeting, separate minutes book have to be maintained. For members meeting, separate minutes book have to be maintained. When I'm talking about minutes book, it also includes the attendance registers that have to be maintained. And when you talk about minutes book, this is how your minutes binder will look like. Okay, this is how your minutes binder will look like. And inside you will have separate leaves, which are your minutes leaves, where after you take a printout on all these things, you will bind it in this and you will keep it. Okay, so this is how you basically your minutes book will look like. So they're talking about your minutes book. Separately you have to maintain for your board meeting, separately you have to maintain for your shareholders meeting. Then books of accounts and the financial statements, register of directors, attendance, these are all self-explanatory. In case of postal ballot forms that are received. Okay, financial records that are required to be maintained. This maybe we can financial records we'll start seeing from the next class. We've covered too much. So we've seen what are the different types of registers and other books and important registers. Financial records and other about financial records we will see in the next class. We will complete this chapter in the next. Okay, there are only so much in this. I think we can complete this itself, then we'll complete this and then we'll end for today's class, because only so much is there and the chapter gets over. Records to be maintained by business can be broken up into 4 different types of records, which is the income record, purchase record, cash record, and the banking record. By looking at the name itself, you will be able to understand what purpose are these records basically maintained for. Income records, purchase records, cash records, and banking records. So income records, to be available accurately state income is important due to several reasons. So they're giving the importance of it. Very important to accurately state what money is going to come to our company in order to understand the financial health of the company, how much of liquid cash we have in our company. Not only it is important to be able to assess the viability and strength of the business, but it is also important that financial records neither overstate or understate the incomes earned by the company. Okay, so the record should not overstate or understate the incomes that are earned by the company. Overstating revenue subject to business to additional taxes, understating the income will attract penalties and tax evasions. So you have to accurately mention how much of incomes are coming in the company has to be recorded properly. And expense and purchase statement, to be able to determine the company's profitability, it is only important that you should record and retain the expenses, because how much income is coming is there in the income records. How much expenses is coming, if I record it properly only, I'll be able to determine my profits. So that is why they are saying this also should be mentioned. Collectively, these will represent the total money spent by the company and in pursuant to the main activities. So it will also help us to understand on the main activity how much we are spending, on the other auxiliary activities how much we are spending, where we are spending unnecessarily, where we can cut short the expenses. All these things, the expense and purchase records will actually help us to understand. Then comes the banking records. All transactions, whatever we are doing with the banks, like we are giving DD, check, all these negotiable instruments, what are transactions that we are going to do, our passbooks, everything, whatever banking related records have to be also maintained by the company. So that is what is being said here. Bank records offer great and they do this bank reconciliation statement and all is done. No, this will actually help in doing that reconciliation statements also. Let's see what they're saying here. Bank records offer great insight into the transaction undertaken by the company. It is able to correctly ascertain the financial strength of the enterprise, as it necessarily that the bank balances as per the records synchronized with the reality. Okay, so these records such as bank account statements along with reconciliation, checkbook and its counter folios, checkbook and cash deposit counterfolio. So all these things have to be maintained. Coming to the last one is cash records. So even though there's digital India movement, everything, a lot of the time company does cash transactions. It is inevitable. In few places, some person is coming. Some maid is coming. She's asking to pay. We cannot say no. We'll do net transfer. We'll have to give her in cash. Certain transactions have to be done in cash, so cash transactions cannot be avoided. So that also has to be recorded. So despite all advanced banking technologies and facilities, businesses must still undertake large number of transactions in cash. So this is what I told you some time back. To be able to actively ascertain the exact amount of cash availed, the business must maintain two principal documents. What are they? Cash collection register to record and reconcile all the collections made, daybook or cash book to map the inward and outward movement of the business. Cash collection register and a daybook, which will have the inflow and outflow. Both these two things have to be maintained. So apart from the statutory registers and the minutes books that are normally maintained on the postal ballot papers, financial records also are mandated by the company to maintain. And it will be kept at the registered office address only. If it has to be kept in any other place, after passing a special resolution only, I can keep it in any other place. Inspection is possible, but it is possible only during business hours. It is open for inspection for debenture holder, security holder, beneficial holder without payment of fees. And yeah, this is that about this particular chapter. So yes, so that chapter is also over. Anything that you would like to specifically say? Yes, now registers can be maintained even in electronic form. However, when we are maintaining these registers in electronic form, you will have to maintain proper management system. The server is in a proper location. The server has to be maintained where the registered office is situated, and easy editing and changes should not be possible. So the specified guidelines that is given if you are going to maintain it in electronic forms. So yeah, but it can be maintained in electronic forms also. And see, it can be nominee partner, it can be partner of estoppel. All these people will still have unlimited liability. Okay, so what is their role? They'll not have any role in the management but when there's a loss and when there's liquidation, they will be liable. Okay. How to get previous year question papers? So this is what has been said. See, there's something called a scanner for the students, for the benefit of the students who actually don't know what a scanner is. See, you can buy it online itself. See, these are basically scanners. Okay. You have to just ensure that it is still the latest. Okay. It will look something like this only. These are basically what scanners are. Okay. It will have until what new syllabus or old syllabus, whatever it is. You can buy it even in the local showrooms where you buy your study material. No, even there you can get your scanners. This is what a scanner. It will have all your past question papers. Question papers alone, if you want, you can get it even from the institute website. But scanners will help you more because it will be all consolidated together. Yeah, guideline answers also you can check. Someone has shared the link for that. Is exams going to be online in December? Not very sure. I don't think so. It can be done at online. I don't think it will be online. We have to wait and see. It's all uncertain situations now. A lot of papers, how you will write it, accounts or tax, how you will write online. Appropriate manner of writing answers. I would suggest if it is a 3-mark question, you can write 3/4 of the page. 5-mark question, you can write 1 full page. 7-mark questions, you can write 2 pages. See, it doesn't matter how much you write, the content, what you make them to understand. See, whenever you're putting diagrams also, you have to also explain that diagram. What does that diagram mean? Only putting the diagram and leaving, the examiner might get irritated. You want me to understand by looking at your diagram. When you don't have time in the end, when you are hurrying up and writing, okay, put the diagram and go, something you will get. Okay, attend all the questions. Basic thing is attend all the questions. And when you're putting a diagram, you at least explain something about the diagram and go. Presentation matters a lot. It is not only for CS exam, it can be any exam. Presentation matters a lot. Person who is having a bad handwriting, you may have to give 2-3 items extra because when it is all theory papers, I should feel comfortable reading your answer. I should not strain too much and see and then read the answer. I'll get irritated. When I get irritated, you will not get marked. Presentation matters. Can we completely rely on scanners? See, you can rely on scanners, say 70%. If you're writing only if you're writing the answers, whatever is there only in the scanner, you may not clear. You have to read the question, you have to see what the answer is saying, and you have to have some broad idea on that answer, and you have to give some extra fitting, some masala and all for that, for which you should know the subject more. So question you take, answer you take, and you should know more about the answer apart from whatever is there in the scanner. Then you can rely on the scanners. You will be able to clear. Okay. It's 5:02 now. We'll end for today. Next class I will see. I think I've covered all my portions. Any other chapter that can be covered, we will try to discuss in the next class. Okay. Thank you all. Yeah. Bye. Thank you. I'm ending the session for all. Okay.